Morning, everybody. How are we doing? Morning, Evil. Morning, Mark. How are we all doing? If you're watching on replay, don't forget to leave comments and use Discord. I'm not getting very many questions in the comments, so I'm assuming most of the people watching on replay are just absorbing everything and taking it in and have no questions. But if you do have questions, don't forget, you can use the comment section, obviously, to ask, and Discord. So this morning, what we're going to do is usual stuff. We're going to go through the news, go through, obviously, see what's happening at the open, go through levels, etc., see what's going on with the position trading. And then we're going to do a little session this morning on news trading. So, well, not news trading per se, maybe, but just looking at the effect of news on the market when it's released, and more importantly after it's released. Morning, James. Morning, Lucas. So I've built an ETA which I'll go through in a little bit more detail in a bit, but basically what it does is it plots the times that news is released for each individual instrument on the chart, so that we can see what the impact is, basically. So what we're looking, I need to clear up all this indicators, don't want any of that. So what each of these lines is a news event. Yeah, so what we can do is say at whatever time that is, what am I trading here? Euro US dollar. So that is when Euro news is released. This is when US dollar news is released. US has multiple releases throughout the day, but as you'll see, as you probably know, all news in every country is released at the same time. So US news always comes out at 1:30. But we also have FOMC, for example, which was released at 7 p.m. All the news for the UK comes out at 7 a.m. All the Australian news comes out at 12:30 a.m. So you can plot these lines on a chart and see exactly what price does around those times. Now, not obviously every day there's going to be a news event. So if nothing happens, the assumption is there was no news. But you'll see that when you get to some of these lines, there is a large movement. This is a light news week. But you'll see an explosive move happening on the news. So we're going to look at what happens after these moves, basically. This is obviously the really bad week for news. Doesn't look like there is any, does there? So that's what today's session is going to be about. And it's more about seeing what happens after the news rather than on the news, because people try to trade news spikes, and that's not how you should do it if you're going to trade scalp intraday on news. It's about looking at what happens once that news is released. The market's had a few minutes to digest it. What happens afterwards? Yeah. So that's what we're going to do this morning. I only built the EA yesterday. I haven't had a chance to really play around with it too much yet, so we'll have a look at it. Doesn't take any trades, but it can do, actually. It's got trading built in. But morning, Barry. Morning, Lucas. I've already said morning, Lucas. This link should be to the Zone Trader Manual, but I can't access it. This link? What link's that? Post the link. That one. It works. Nothing wrong with the link, unless you've got a different link, or I've posted a link somewhere that's not right. You'll have to let me know where you're seeing that link that doesn't work, and I'll see if I can fix it. But they all work, as far as I know. Well, they did. I've just shown you they all work. This link routed me to the blogs. Goes to the Zone Trader. I don't know. I just clicked on it. It's gone here. I don't know what to say. Mine doesn't. Blogs. I guess it's that page there. God, there's a lot of blogs, isn't there? Is there a search system? Yeah, you could search. You could search for it. Don't know. Clear cache. I don't know. It's not. That's one for the internet in general to answer, or MQL5. But you know, I just clicked it. It's there. So 244 other people have had no problem getting there. So it definitely works because people are there. But I don't know. Can't answer that one. One of those mysteries. Yeah, don't know. You've got me there. Right. So just quickly starting off with opens. Long on the FTSE, short on the DAX. Pre-market range was too small on the DAX today, so 5-minute ORB short. Pre-market range break on the FTSE. Not an absolutely explosive morning, but not too bad on the DAX. So we'll see where those go. Yesterday was the first losing day this year on indices for the ORB, or rather for the SIH. Morning, Vitaly. So yeah, big open to this week, this year. January's been fantastic. There's been so much volatility in January, and yeah, hopefully it will continue. But market's certainly woken up. So we'll see how we get on today. See if we, at the moment, we've got 2 clean breaks in the opposite direction, which always worries me. Anyway, so 244 people bought the Zone Trader. No, I wish. If 244 people had bought the Zone Trader, I wouldn't be sitting here. I'd just be selling software. Nowhere near. I think what you'll find is people that are interested in it or want to know more about it will watch the video and then they'll read the manual to understand what it does, how it works. It's not people buying it. You know, it's like I've got old manuals for my Porsches that I've owned. I haven't got the Porsches anymore, but I've still got the manuals, and every now and again I get the manual out and look through it. But I haven't got one. No, it's not sales. If that was sales, I would literally stop trading and turn myself into a software developer. 244, so that's 20. That'd be 24 grand. I only released it a month ago. If I could earn 24 grand a month selling software, I'd sell software. Trading's a hell of a lot harder than doing that, isn't it? Maybe I should. I don't know. I'm not quite sure there's enough people out there that would want to buy it at that. You know, I don't know. Anyway, idea. I kind of do it as a supplement for me, basically, because it's what I use. I build what I want to use, but I want to give it to other people. But the catch-22 when you do that is everybody wants your time, and I charge for the products because I spend a lot of time, and my time is split kind of half the time trading, planning, education, and stuff, and half the time as a support agent. I could employ someone to be a support agent, but then I don't think they'd be able to do it. You got to know what I know to be able to do the support, haven't you? It's a bit, I don't know. It's a weird situation. It's a very, very weird situation. I mean, I fell into it. Anyway, carry on. So news today. We've had unemployment overnight for Aussie, 56.3. That is massively up. Unemployment rate came out as unchanged. Australian dollar didn't do an awful lot. We have got ADR on Aussie Swiss and Aussie Yen, but I think that's more because of the Yen movement. So as you can see, the Aussie crashed down and is now rallying back up. So it was a positive news event, which means it should be positive Oz. Unemployment rate came out as neutral, which is no movement. So I would expect a whipsaw and nothing, but we got a downward move, and they came back and retested the news from yesterday. So we're pushing back up to origin. So it was a V-shaped recovery. So any ADRs that you took off of that are working out nicely, but only just tapped into ADR. So yeah, no real news or movement on the Australian. We have had some movement, but no direction. We had obviously the pound GDP come out. Thankfully, it's positive. Though it's smaller than they were expecting, it's positive, because if you get 3 GDPs as a negative in a row, that is the official definition of recession. So the UK escaped recession by 0.1%. It ain't going well. So the pound this morning, we had some movement on that. whiz through the pound pairs. So as you can see, pound had a little bit of a rally, and then this is the news here at 7 o'clock, and then it dropped back down again. So a little bit of a spike against the CAD, little bit of a drop there, but not a massive reaction, because although it is a positive, it's a kind of negative as well, because it's lower than forecast, but it's higher than zero, which is good. So it kind of falls into that zone of meh. So no real news. I posted this in the Discord group this morning. EA took an ADR reversal yesterday for me. So there's the low of the day. That is 125 ADR. Because I'm using the hourly chart to get in, it took an ADR reversal here. It's already reversed. So this is one of those weird anomalies where the EA just, it does what it says. It got an ADR, it took a trade. It's just an awful entry. So I got out of it. I don't know which way it's going to go, but I just, that's not a reason to get in. That's a weird thing. So got out of that. So the rest of the day's news, that pound is nothing. We've got retail and unemployment claims. Unemployment claims are always at 1:30 on Thursdays, so that's coming out this afternoon. So 1:30 this afternoon, we've got potential news, which we'll look at in a sec for how to potentially trade that. Retail sales tomorrow for the pound, and that's it. Then it's Trump. So Monday, is it working yet? Yeah, they fixed it. So Monday, we've got a bank holiday because Trump is getting on board his Make America Great Again machine. So we'll see what happens. Then I don't know what's going to happen at all. It's just Trump. So we got the Trump effect. It's all going to be fun. Hello, Vitaly. So, oh yeah, you were talking about that thing. Outro, morning. How we go? Okay, so there's your zone. Your zone. You're talking about talking about the zone trader now. So there's your news. There's nothing else really that I could see overnight that was particularly exciting. Bank of Japan. So that sorry, there was actually. That's a complete lie. As I said, we got some movement in the yen. Which, as you can see, is there. It's not a massive thing, but Bank of Japan again this morning confirmed that they're probably going to hike the rates next week. The market already knew this because they already said it last week, so it was not really news. It's big news because it is to do with interest rates, but it's news we kind of already knew. So they're doing this, I think, to try and curb the US dollar yen rally against them. They want that US dollar yen down, obviously, because we're at intervention and that's not what they want. They don't want to be up here. That's why they did this. So I think this interest rate hike is to try and encourage the market to invest more in the yen by giving them better returns, positive returns. It's still way lower than everywhere else, but it's better than it was. So, and as you can see, it's kind of starting to have the positive impact that they want, but it's going to be a very slow grind. So, while I want to be long the yen, I don't want to be long until we get that interest rate. So I'm just kind of steering clear of the yen as much as I can at the minute. I don't really want to be in it at all. I've got some zone trades on which I can't really do anything about. One of them's short, one of them's long. So we'll look at those in a sec. But that's the only other news overnight, really. There's your Australian unemployment. PPI came out. It doesn't really do anything because it's not to do with inflation over there. And then Fed said a load of stuff last night. Nothing particularly exciting. So there you go. We got the Gaza peace deal done as well. That's good. Not that that will potentially affect the markets, but it's obviously just a good thing. So there's your news. ADRs today, you've got a few, but they're all Aussie Swiss, for example, starting to play out. They are only just tapped into. These are literally just enough movement just to get an ADR hit, but it has come beautifully off of ADR. There's the reversal alert up. So you've got Aussie yen as well. Nice reversal going in there. Wow, you can't get on that. That's just, there's the reversal alert, yeah? Look at, so the reversal alert off of the ADR low is above the ADR high. Again, this is the trouble with trading with EAs. EAs do what they're told. sometimes you just get price action that is anomalous and you can't do anything with it. It's done nothing but sell all the way down to that low, and that low to that high happened to be over an ADR. Can't trade it. You can trade it manually, but you can't trade it electronically. CAD, same thing. Huge move to the downside. So all these yens really a bit difficult to get into. Euro odd, Australian dollar straight off of ADR, straight out of propulsion. Nice level. Yeah, double bottom bounce at ADR in propulsion, triple confluence, very good short. New Zealand dollar yen, nice extension to the downside, but again, not one of those you can't trade. The reversal alert is going to be right at the top there. Oh no, it's already happened. No, you had one in the middle there, so we just had a reversal on that. And US dollar yen, so they're not very good ADRs today, really. They're just it's just a bit messy. RSIs, the only thing we've got is US dollar yen. Obviously, that's been pushing hard, so we've got a 4-hour extension on the US dollar yen. So down there, lovely W formation out of propulsion, but we have broken that low after retesting it. So potentially this is a lovely short, and I've got this short on the zone trader as well. So that one is the only extension potentially for a long opportunity, and CAD yen and Swiss yen. But as I say, just I'm falling out of love very much with the yen since last year's intervention, and the fact that the market doesn't seem to be able to let this carry trade go. I just think, and after doing more back testing on the yen, I just think the yen is just too volatile and difficult to trade. It's very wicky and it's very trendy, but it's also intervention-y. Yeah, so it works very well as a trend strategy, and I think it will continue to do that. But for position trading, I just think it's a little too dangerous and a little too costly at the moment. When those interest rates come up, so next week, next Friday, we're going to start to increase those interest rates. When their interest rates start getting up to the sort of 0.751% area, this is going to become exactly the same as everything else out there. Your swaps are going to be affordable because the interest rate differentials will be lower. And it's going to start moving more because it will get used more as an instrument to move money in and out of. The Japanese economy is great. You know, they do a lot of export. They make a lot of stuff. So the problem as well with Japan is just the US relationship at the minute, and obviously trade tariffs are coming in. So at the minute, it's just a little bit too tricky to position trade from a fundamental perspective. But I think that's probably going to change over the next year. So we'll just have to keep an eye on it. But for the moment, I'm just going to be trading trend pullbacks on it. So zones, let's look at the positions basically first. I did manage to bank yesterday. I managed to bank one. I banked an Aussie yesterday, Aussie CAD. So I got out of Aussie CAD yesterday. I still have Aussie US running. So the reason I exited this one, which is basically the same as that, was because I have the Aussie US on, and the Aussie US is very, very, very similar price action. Now, I didn't get out of it yesterday. I had an exit opportunity. We did hit that propulsion and we did sell, but that was a big ADR extension yesterday. So, and it was on that news spike. So we've got this nice reversal going on, but I think this is a return to origin bounce, and I think we're going to get a little bit more weakness in that US dollar today. Hopefully, I'm looking for some negative numbers to come out today. So I'm hoping that we're going to break this high today, and we're going to start to unravel some of this big move. So I'm being brave and looking for a pullback on the entire move that we've had since November. So might be the right idea, might be the wrong idea. I don't know, but I'm looking for some weakness to start to trickle in when Trump comes in, because he's going to put all these trade tariffs in. But while trade tariffs are a good thing for the US, they're a bad thing economically, because the opposing party, when you think about this, and this is why these trade wars start, and this is why they call them trade wars, when the US say 2.5% extra on everything that you import, the country will go, no problem, up the prices by 3%, here you go. and they basically up their prices to cover the tax. And then the tax goes, well, now it's 5%. And we go, no problem, here's your 5%. You can't continuously fight that war, because if America needs whatever they're importing, they need whatever they're importing. So by putting these taxes up, what it actually does is affect the economy in a negative way often. So I think with the first batch of these tariffs that are going to be placed, there's a possibility that we're going to have a weakened US dollar while the market tries to identify how the reaction is going to be from the other parties that are having these hikes put onto them. So things like Canada, for example, if he puts the import duties up on Canada, Canada's just going to raise the prices, or they will take a hit on it. But until we know whether they raise the prices or take a hit, you don't know what the impact is going to be economically, which is going to obviously drive the currency. So I think we'll probably see a little bit of weakness coming through in the US. But again, it's one of those things with Trump. When he gets in next week, first thing he's going to do is change everything that he didn't like about Biden's rules. How that is going to affect the market, nobody knows at the moment, because we don't know what he's going to do. So that's my plan on the Aussie US. It can obviously do anything. Nobody really knows what's going to happen, but it's a case of just playing around really and seeing what comes about at the end of the day. So that's what I've got on at the moment. There's nothing particularly in terrible drawdown. The pound pairs that I'm in are starting to annoy me because they're not making any progress. We've got the pound CAD. They're again, weak US dollar will give us weak CAD, which will rally up. We've got beautiful propulsion targets to the upside, which I think the market's going to want to have a go at. And we're coming off the monthly low, which is holding. The buyers are holding the monthly low. So I think there's a good chance of a bounce on this. We just need something positive out the pound, or we need negative numbers for the US or for CAD. So we'll see what happens with that. But yeah, pound CAD and pound Swiss. Pound Swiss isn't too bad, but pound odd as well. You know, it's just this grindy pound at the minute. We are coming back into the origin of that accumulation break. So this is potentially going to be the reversal that holds. So we'll see. But news, not amazing for the Australians. Not bad. Pound, not amazing, not bad. So today's news for Aussie and the pound didn't really do anything. So got that reversal this morning. We are retesting right now. So I'm looking for that retest to hold. So low, high, higher, low, off we go. But at the moment we're in a downtrend. So we'll see what happens. So those are the positions. As I just closed out that pound US today. So yeah, we'll see what happens with those. We'll look at the zones. So we'll run through these. Morning. I feel like he has not thought it out before he's come out and said it. Yep, that is Trump. That is exactly Trump. Now he's just like, well, I've said it, I'll roll with it. Yeah. Morning Forex Fire. Don't think we will have much positive news in the pound over the next 4 years either. No, the pound's not doing very well at the minute. We need to shake something up somehow and get that debt down. It's costing too much money. We are going to be dropping interest rates probably this month as well. So that's potentially going to harm the pound as well. So we'll see what happens. But Trump, if you haven't traded through Trump, which you probably haven't, the Trump administration last time was chaotic, to say the least. So he had full access to all social media last time. Obviously, now he's got Zuckerberg and Jeff Bezos and Elon Musk in his pocket, he's got full access to social media again. So what he does is exactly what you just said. He comes out and says something. He doesn't consult anybody. He just says it because that's what he does. He's used to ruling the roost. He's used to running the company and everybody does what he says. It doesn't work that way as a president. Normally a president has advisors and advisors advise him on things and he makes decisions based on advice. Trump does it the other way around. He says stuff and then he goes, what do you think about that, guys? Sorry, too late, you've done it. The market's gone nuts. And this is why we get the Trump effect. And we had the Trump effect last time, which is partly why I'm doing the news thing today. When you get these big spikes, what you tend to get is a complete retracement on them. Yeah, because it's not news. What he says is a knee-jerk reaction and the market has to react to it in case it's right. but 90% of the time it's not right, or he's thought about it, he's figured it out, he says it before he tells anybody else, and then he convinces everybody it's the right thing to do, and they go, yeah, you're right, but you should have asked us first. Yeah, so it's like having a child, basically. I bet the Secret Service and everybody in America is like, here we go again, because it's like having a kid in charge of the country, basically. But it's a kid that thinks about stuff before he does it, but tends to engage the mouth before he's actually ready to do what he's doing. So I don't know, we'll see. But yeah, it's going to be an interesting, well, this month and next month is going to be very interesting, because he's going to be laying out all the new guidance and unpicking everything he didn't like, you know, Obamacare disappearing, all that sort of stuff. You know, he's just going to unpick everything he doesn't like about what Biden's put in place. The Gaza peace deal. Yeah, I mean, he's not going to undo that. That would be the suicide for his presidency, wouldn't it? But you know, it's one of those things. Anyway, so let's whiz through these. So I'm just going to speed up going through the zones. I'm not going to explain every one every day, because if the zone from here is still here and the zone is still here, I explained it yesterday or the day before. So basically I'm going to whiz through these, and if I don't need to adjust any zones, I'm still waiting for either it to do that, get onto that zone, or hit my target and flip me short. Yeah, so I'm just going to whiz through them. Nothing to do there. What's your thoughts on Reeves and Starmer? No idea. Don't know. I like them both, but whether they're good for the country, I don't think. I say quickly before I'll cover that before I do this. I don't think it matters who you put in charge of this country. This country's screwed at the moment, because there is nobody you can put in charge at the minute here to dig out of this hole that we're in. Yeah, inflation has gone up at the highest time of borrowing. We are in debt 120 billion. You can't get out. Yeah, you've either got to put up the taxes, or you've got to cut stuff. They've cut everything over the last 4 years to try and keep on top of the inflation payments, which they haven't. So there's nothing less to cut. They said they won't put up taxes, so they've screwed themselves. But no government can put in place a set of things that are going to dig out of this hole. It's just impossible. You either need to you just got to tax us more. That's the only way I can see out of it. There might be more clever things that they can do, but right now, I can't really see anything positive. And I don't think Reeves and Starmer can do much about it. But I don't think if you put anybody else in charge, they'd be able to do much about it either. Someone's got to make some really hard choices. Do you know what the hard choice they made when they came in was? Taking £300 away from pensioners. Cheers, that's really helpful. Anyway, enough of that, politics. Can maybe anybody in here testing the Zone Trader manual link to for me? I tested it on mobile and 2 PCs and 4 browsers. I can't help. I don't see or find it. But how can you not find it? It's a web address. The entire planet can access this web address. I don't understand how you can't get to this page. It's just a page. I'll tell you what I'll do. I'll make you a PDF. Hang on a minute. I'm doing this live, look. Save as Adobe PDF. Oh, what's going on? PDF. Look at this. Look at this for service. PDF Maker was unable to save the file. Please save the file and run PDF Maker again. What? What's PDF Maker? I just want to save a PDF. What do you mean I can't? What's a PDF maker? I've got Adobe Acrobat, for God's sake, you stupid computer. Huh? I'll make you a PDF. I've tested the link above and it opens on the blog homepage for you as well. What? How can it not open for you? I'm not being funny, but there's nothing special about... Let me just put this in an incognito window. It does. Why is that? But how's 244 other people got to it then? What? The internet's broken. Weird. That works. Weird. That works. It's Trump. Yeah, it's broken the internet. I'll tell you what I will do. I don't know what to do. I'll have to think about that. Okay, I'm not stupid. I'm happy. Yeah. When was it published? When did I publish this? Does it even give a publication date? Draft? It's not a draft. Draft? What? Sorry, let me just do this. Publish. I had published it. Try now. I had published it. 244 people have seen it. I'm not being funny. 245. Somehow that's become unpublished after it was published. Ah, there you go. I'll have to check. What else have I got in draft? I'll have to check that because I don't know if that one's published either. Weird. Something's gone wrong. They were published. So, yeah, sorry about that. I don't know. That wasn't me. That was them. MQL5 did that because I did publish it. Because I've had people saying in the manual, and I've sent people links to the manual, and they've come back and said, in the manual it says, so how they must have been able to access it to be able to read it, obviously. So something's gone weird there. They've unpublished it somehow. Glitch. Don't know. Matrix has gone wrong. Something went wrong. But anyway, it's fixed. There you go. Done. There you go, Trump. Got you. There we go. Make the first PDF before you clear the cache. Make first PDF before you clear the cache. I don't know. Fixed now anyway, so let's ignore that. Right, next. We're never going to get through today's session if I don't get on with stuff. Right, Aussie CAD, nothing's changed. Aussie Swiss, nothing's changed. Oh my God, I just missed my entry. Still want the entry there though, looking for that. So I'm looking for a double top or down there. Yeah, so nothing's changed on that one. Aussie yen not trading. Aussie New Zealand sideways, just waiting for it to either get up there or get down there. Has been sitting sideways forever. Aussie US still waiting to get back up to double top that. Second entry's in down there waiting. CAD Swiss again gone nowhere. This week's just dead at the minute. We haven't gone anywhere at all, so struggling at the moment. So big move just gone in on that. So a big move just gone in on the Swiss. No, CAD. Canadian dollar just yeah, big spike just gone in on the CAD. Hamas creating a last-minute crisis that prevents deal. Hamas is reneging the agreed-upon points. God. Anyway, right, so yeah, nothing's happened there. CAD yen not trading. Swiss yen not trading. Euro odd, looking at highs, basically, for a short entry. This is the supply-demand area. It's just tapped into just below that and is reversing, but I want to see a double top on it because I'm looking for this gap to get filled. So I'm looking to get in there and see if that gap is going to be orphaned. If that gap's not going to be orphaned, that's going to be second entry before it drops. So still waiting patiently to get in short up there. Euro CAD, again, looking to get in short up here. But we're not really going anywhere. Euro Swiss, absolute sideways. I've got a buy on this. I stuck it to break even because it's not going anywhere. It's still not going anywhere. We're just not going anywhere on it. So this is the 4-hour chart. We're just not going anywhere. So I can't really do anything with it. But it's either going to go up and test that area, or it's going to come down and it's going to test down here and break those lows. So one of those two things is going to happen. It's not moving though. Euro pound, new short taken, which I need to now place a new one on. So still looking to target that accumulation break. So this is the news accumulation, news retest off. So I'm looking for that to be a downside pullback point, or it's either going to reverse. We have come out of my resistance area. So this was the previous resistance, which we've tapped into, entry taken, and we are going short. We're coming back up into it at the moment. So it's retesting. So looking for this area to hold. So next level above there, got to go out onto a higher time frame. So got this little high here, but that's too close. So very hard to pick a level after this. So I'm going to look at the price action around that area and see if I can spot something interesting. So that low there is probably the most interesting point after these highs, which is basically what I've just sold. So we've got nothing but clear air between here and here. So that price action is just straight down. So there's not really any reason for the market to react at that point. It's clear air, it's price discovery, price action. Then we went into balance. We got a little bit of balance here before the price discovery. So this area, if we break this high, I would expect them to blow straight through it and find the next level of sellers. So we had sellers, buyers trying to beat them back. They won. That's where the sellers are. All the buyers there, flip short. So that's where I would sell. So that's my next short area on that one. But obviously, it's quite a way back. So I'm not going to stick another entry there for the sake of it because it's just in the middle of nowhere. So take a new entry at a logical area. If we do manage to just scream straight up into there, we've got this whole move here, which they haven't done a proper retracement on. So I just want to get the average up. But again, 5 positions on this. It's getting to the point where I just want to break even exit on it. Euro yen not in. Euro New Zealand not gone anywhere. Sideways. Still looking for either to come down into there or come up and retest those highs. I've got shorts on, so I just want it to move. Everything's stuck. Sideways. Again, want it to move. I've got longs on. Just want to get up and retest these highs. So that double top this high, this high. This is a propulsion gap. Sellers, 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 sellers come up. Want to sell with the sellers, so want to get up to where the sellers are. You pound odd, new entry taken on that late last night out of the support. So this is the propulsion gap fill. Done. So looking for market structure break back up. So I'm going to leave target where it is, which is this low and high area here. So that's your zone of support turned resistance. So looking for a retest of that on the way down. If it's going to continue down. Obviously, if it's going to go up, doesn't matter. I'll be getting out. So next entry on this, it's got to be those lows. So we've got this accumulation here. That whole area is a sort of an accumulation, but I'm going to take that peak out of it and just look at this area here. So this accumulation, we had a false breakout which came back into the range, and then we had news take it away. So somewhere around there I will look to buy this accumulation and assume that the buyers from here are going to step back in. Bit of an old zone though. Pound CAD, nothing's changed, just waiting. Pound Swiss, same, looking for a push back up into the origin of that move. If it doesn't work, looking for these lows to act as support, because we'll be breaking this level. We are holding this level at the moment, just. So we've wicked through it, but we are just holding it still. So either it's going to pop back up and we're going to maintain the range, or we're going to break the range, which means we're going to find some buyers a little bit below. Pound yen. So this is the long that I've got on the yen, which I don't want to be in. Next entry on this, haven't got on yet. So looking for those lows, basically. Where we are right now is not a bad area for support. So we'll see if this holds, but we've got quite a lot of yen strength coming through. So I think we'll probably break down. So I'm hoping we get some kind of decent reaction there. I want to be out of this ideally by Friday next week, before those interest rates are announced. There's a little accumulation, very small accumulation there, but in fact that's probably what's just reacted there. Look, so we'll see. I just want out of it really. So what I'm going to do, I'm just going to move my target down into a loss. If we double top here and we hold this range until next Friday, I just want to get out really. So small loss on that. Pound New Zealand, not trading too expensive. Pound US, sitting around for the last 2 days going nowhere. So I'm looking for a double bottom to get the next buy on, or I'm looking to come back up and put in a lower high basically. So I'll see if I need another order. If I get another order on, which would probably be the best thing to do, that will bring the average down nicely, which means I can target this propulsion gap. But right now that propulsion gap is break even. So I'm looking for a nice big move up into there, but I'd rather it actually drop, allow me to get another position on. So I've got 4 on, bring the average down, and then I'm going to have a profitable exit in propulsion because it's highly likely to test propulsion. So that's the best play on that. Looking to get out of this one. Again, 5 trades on, it's just going wrong. So want an exit. It's just not going anywhere. I've been sitting around for the last few days. New Zealand Swiss, first buy taken on this one. So I need a new buy order at the lows. Target is the highs. New Zealand yen, I'm not in. US yen, sideways for the last 2 days, not doing anything. So yeah, again, just trying to get out a break even on this in propulsion. Yeah, so if we can get up to there, I'm out. Just take the break even on it. 6 positions. US dollar yen, sorry, US dollar CAD have got sells on. Again, we're holding this low. So next entry is above these highs. It's just sideways. There's nothing you can do with this at the minute. We've literally been sideways since middle of December. So, yeah, stuck. I can't do anything with it. Waiting. US dollar Swiss. Same thing. 6 entries short. Just one out. Looking for a break-even exit. So I just want some bad news for the US. One news day. Yeah, this movement here from there to there is 100 pips. Yeah, it's 1.5 ADR. That's all I want. 1.5 ADR movement. Just some weakness, temporary weakness. And the US dollar yen. So I had an exit. Today might be the day. So we have broken the lows. Yeah, so we had that low, which held. They retested it, bounced. We broke it this morning on that announcement of a yen increase. So hopefully the market structure is going to hold today and we're going to continue short, which it looks like it's doing. So obviously you got the high, low, high, low, high, low, high, continuation. So I'm looking basically to exit the shorts here. So we got this accumulation break, which is off that level. So I'm looking for either a bounce out of there, not necessarily up, but I'm looking for it to bounce there, which means that'll be my exit. Or if we get some news on the yen or the US around about the time we get into that area, they may well just blow straight through it and come down and retest those lows. So in which case, obviously, the zone will just expand and it will get me out in the next positive price action. But yeah, getting close to exit on that. I just want out, really, because it's so expensive to hold. In fact, that is not probably going to be a profit. It's probably going to be a loss. 326, I mean, 1.1 DD. So probably that will be a loss because the costs, the swap costs have been so high. But we'll see what happens when we get there. There we go. So there's your zones all done. Looks, it works at the beginning of the year. I'm super sure. What was that? It works at the beginning of the year. Don't know. What was I talking about? Right. I have to remember what I was talking about. Okay. DAX short break is working marginally. We had this light gap up before the market opened today, which is basically just filled now. So we bought the gap fill. Looks like it's continuing. FTSE's stuck. There's no movement today, really. So DAX is nice clean break, but it's got a hell of a way to go until 3R. So 3R target is a monthly high. I'm just moving the target up. So we got this propulsion gap into the monthly level. So I'm just moving up in case we bounce off the monthly high. There's lovely big propulsion gaps to the downside from yesterday's price action because the DAX obviously rallied off the back of the CPI numbers. So just moving that target up a little bit because it was here, just so that it gets triggered if we do get the bounce, because if it does bounce off that level, I'm just going to miss target, which is pointless. So moving that one slightly. FTSE's just stuck, isn't it? Are we up all-time highs? Not quite. So we are above last week's high now. We're holding that level. So this is target, obviously, most recent high. So just going to move that again down slightly. And I'm also going to move that down slightly as well because we've got a monthly level coming up. So we've got this high of week and then really old high of week, but it is an old high. So we've got this area here, which is got a load of sellers in it. And then we've got that area there as well. So upside targets, just slightly adjusting them. Downside, I'll just leave it at 5R, which would be just about an ADR. So if it hedges, I'll get out on a hedge down there. There we go. So we'll see where we go, but it looks like a clean break on the DAX. Was a old comment in the zone manual at the beginning of the year. It worked at the beginning of the year. What was an old comment in the zone trader manual? Don't know what you mean. Anyway, Outro, is there any chance of an update to the ORB EA so it draws on the 1R, 2R, etc., like SIH? Possibly. I'll have to see how the logic works. The ORB logic is very, very different to the SIH logic. Might be able to, yeah. Yeah, I might be able to. I'll have a look. Right, so news, trading news. So basically what I wanted to cover this morning was looking at basically how news affects the market and what happens after news, because this year we are going to get a lot more movement with news, basically. So not necessarily scheduled news, but also with Trump news. Yeah. So what news basically does is it affects the market by giving a differential. So what the market does is it scorecards what the fundamentals are doing. So it will look at unemployment rate in Australia and it will give it a score. It will look at the unemployment change in Australia and give it a score. It will give the interest rate a score. It will give the inflation a score. It will give everything that is a macro fundamental a score, which builds up an overall, are we looking to go long or short on the Australian dollar over the next period of time? So the market has a bias based on what the fundamentals are saying is going to happen to the economy in the country and the currency. The reason you get news spikes is when you get a large differential. So let's look at the CPI from yesterday, for example. We got a 0.2 on a 0.3. So you saw yesterday the US dollar had a massive spike. Now that wasn't really a news event as such, because the interest rate differential that we got was 0.1%, which is tiny. So if you look at what happens at news, CPI specifically, yeah, we quite often miss by 0.1. It's normal. Yeah. So when you see a differential that is either non-existent, i.e. we were forecasting a 0.3 and we got a 0.3, the market usually won't have much reaction to that. If it does have a reaction to that, it's highly probable that you should fade that move. Yeah, because we were expecting that. We've already priced that in because the market's already decided that that's going to happen and then it moves that way. So there's absolutely no reason for a spike to occur. Now, they do use news events because they know there's going to be large volumes of orders available and added at news to execute large orders. Sometimes these are imbalanced and give you a spike, but there's no reason for the market to suddenly go, holy crap, we really need to buy a load of US dollar if the news came out as they were expecting, because they've already bought it. So what you tend to do is you find it becomes an A-shaped recovery, or if it's a downward move, it becomes a V-shaped recovery. And within 24 hours, often within the same day, it's done that and come back to the start of the origin of the move. If you get a bigger than a 0.1 differential, and looking at CPI here for the last year or so, we haven't had one. Yeah, so this is totally normal, which is why I said yesterday, if you remember, if you were in the stream, that's a hell of a big reaction for a non-news event. What happened? Just came back to the start. Yeah, it wasn't news. The market went, holy crap, we've got exactly what we're expecting. Oh, right. That's what happens. Yeah, so this is what happens the vast majority of the time. It's what we call a V-shaped recovery and an A-shaped recovery. When there is a differential that is not expected, so looking at the pound CPI, we had a 2.6 forecast, we got a 2.6. We had a 2.2, we got a 2.3. We had a 1.9, we got a 1.7. Anything bigger than a 0.1 differential in something like interest rates, inflation, and things like that, the market's going to pay attention. Yeah. So on October the 16th, 2024, if we go and quickly find the pound, let's find the pound US. 4-hour chart's probably best. Whoops, too far. Yeah, October the 16th, 2024 is there. You can see the news obviously already. Yeah, so that is the news. Now, this news was not what we were expecting, and a much bigger differential than we were expecting, because we normally will give it 1.1% either way. We got 2.2, a 0.2 differential. So in this case, the market flew down, but it didn't do a V-shaped recovery, because holy crap, we were selling expecting whatever that was. In this case, we were expecting to get a 1.9, but we actually got a 1.7. So we haven't sold enough pound, guys. Yeah, we were selling off the pound expecting it to come down, but it came down further. We need to sell more. So a large order goes in, which basically means that they are going to balance their books, because everything's calculated with a forecast in play. When you get the forecast, you cash in and make a load of money. If you don't get the forecast, you've got an imbalance of either short or long orders, depending on what the news is doing. So in that case, you don't get the V-shaped recovery. Yeah, it did retrace 50%, but then it continued down. The next day, we actually did come back to the origin of the move. So it's more of a that. But what you'll often find is when you get a big move like that, you'll get an accumulation and continuation. And this is where we find those orphaned propulsion gaps on news. A large move, we don't manage to come all the way back up to it. So we have that propulsion gap drawn, and it flip-flops around like that, and then it collapses. And then we have this propulsion gap, which acts as a target later on in the week, the month, the year, whatever. Yeah, so that's basically how news works. Again, here, look, I don't know what happened that day, but news, yeah, and that was not what they were expecting. So we didn't come back and undo it, because it means the banks need more than they were expecting to have. Yeah, so that's basically how news operates and the effect that it has on the market. There's probably other examples like PPI. If we look at the core PPI, and you just need to look at what the differentials are normally. Yeah, so when you get a forecast, it's rare that the market will move. It will maybe do a bit of that, but if you see it come out as forecast and you see an ADR hit, short it. Yeah, it's coming back down again. There's absolutely no reason to do that if there is no differential in the forecast. But when you get a 0.2, we're expecting it to go up, and instead of going up, it goes down by 0.3, you're going to have a big move in the US dollar, and it's unlikely to get back there. So what you're looking for is a pullback short. Yeah, so it's looking at the effects the news has initially, and then looking at what the actual news is. So is it a market overreaction to a normal event, in which case then you reverse it? Or is it, holy crap, we were expecting a 0.2, we got a 0, so therefore they look like they're going to sell more of that. So we're looking for either an accumulation drop or a pullback drop. So what I've done is I've built an EA, and all this EA does is allows me to place the time for news. Yeah, so all Australian news happens at 12:30 a.m. my time. Yep. So 12:30 a.m. my time UTC is +2 with my broker, 2:30 in the morning. So on my broker's chart at 02:30 candle time is 12:30 a.m. Australia. Yeah. The Australian rates are released at 3:30 p.m., which is 3:30 a.m., which is 5:30 a.m. on my broker. So all I've done is I've plotted the Australian, the Canadian, the Euro, the Pound, the New Zealand, and also the US and oil. But with the US, they work slightly differently with news. The US has a lot more news than everybody else because it's the biggest economy. It affects everything. It's the world's biggest currency. So there's a lot more news events, a lot more macros released for it. So with the US, we actually have 2 news times. We have news released at 1:30. We also have news released at 3 o'clock. And then to complicate things even more, at 2:30, the market opens. So this is UK time, obviously. So, and I've just taken these times from Forex Factory from my time zone, but obviously they'll be different maybe in your time zone, so wherever you are. But we've also then got the US rates, which are released at 7 p.m. on Wednesdays. FOMC is 7 p.m. on a Wednesday. So we've got this 7 o'clock candle. We've also got this weird anomaly where they release the non-farm payroll and the NFP unemployment figures at 1:15 on a Wednesday. So we have these weird anomalies with the US where they actually release news at 4 different times a day instead of 2 like everybody else on the planet. Got to be different. So all of those are plotted on the chart, and all I've done is every single day, it's not reading from a news feed or anything, it's literally just at that time of day it draws a line on the chart. And when you get to that time of day, either there is no news or there is news. But if there is news, we can see what the market did on that news. So I'm just going to run this on the pound US. I'm just going to run this on something simpler. I'm going to run it on pound CAD, because that's just going to give us the pound news and and CAD news. So there's 4 lots of US news. So it's a little bit more complex. I'm just going to regenerate the data on that because I haven't, I've just updated my data, so it's just got to regenerate the set file, the data file. Yeah, so does that make sense? So that's basically what we're looking at. So we're looking to see what happens on these spikes, or rather what happens after these spikes. DAX is just testing yesterday's low. Is that yesterday's low? No, it's not yesterday's low. That's the pre-market low. No, it's not. Sorry, I'm in the wrong day. Yeah, that's kind of the pre-market, which isn't pre-market low. That's the overnight broker session. So ignore that. Yeah, I mean, we've got, this is the area. Where's my pen gone? Did I shut my pen? This is the area I'd be interested in, which is basically after the news where we held. We popped down a little bit. So top of propulsion. Not really going very fast today. It is moving down, which is good. Right, so let me just get rid of the indicators a minute. Don't need those. So what it's going to do is it's just going to move through time and basically draw a line on the chart. So this is looking for pound. So the news is going to be early morning. Yeah, so this line here is going to be 9 a.m., which is 7 a.m. UK time, and that is when we release our CPI figures, etc., etc., etc. Yeah, so 7 a.m. we had CPI. 7 a.m. this morning we had our GDP figures come out. So at 7 a.m., if there's news for the pound, like there is on Tuesday, the claimant count, that is when it's going to land every single time. So that is our 7 o'clock line for the pound. And we've also got this one here, which is the interest rate. So the thick one is the interest rate. The thin one is the normal. This is 8 o'clock. Now, everybody says the market opens at 8 o'clock. I don't think there is an open, because I can see price moving here on the pound, and sometimes it moves here. Sometimes it does move right on 8 o'clock, which is basically when people start working banks. But so we have a nice move there. So this is the start of the London session. These brownie lines here are the Canadian. So this one here is going to be your 3 p.m., 3:30, which is when the CAD news comes out. And then we've got a 4:45, which is 2:45 in the afternoon. So that's when the CAD news is released. So if we look at CAD. Yeah, 1:30 in the afternoon is when we get the CPI numbers. 1:30 retail, and then if we go forward a little bit, 2:45 is when they release their interest rates. Yeah, so that's all those lines are. Now, obviously, we don't get an awful lot of news. So what we're going to see when we're doing this is tons of time where it just doesn't do anything because there's no news at those times. But what we're looking for is what happens when there is a move on those lines. Yeah, so I will speed through a little bit and we'll wait and see when we get some news, which should be fairly obvious. Right, so we had a big drop there, 6th of October. That kind of dropped before it, so I don't think that necessarily was a news event. That one, we'll just whiz through that one. Where am I looking here? 2020 in October. Just wondering if we didn't get an awful lot of movement off of news because there was interest rates were in October. Interest rates were back to zero and stuff, weren't they? And there wasn't really any changes happening. So this might not be the best time to actually test this. But we'll wait and see. Maybe I should have used the US pair. Pre-market. This is a bit of a off-the-cuff session, as you probably, because I only built this yesterday. I haven't actually properly tested it. I just wanted to make sure it drew the lines at the right time. But I'm not actually seeing a lot of movement. There we go. So that's a news event. We've got one. So this is a, this will be a Canadian pound. Yeah, 7 a.m. So 7 a.m. October the 22nd, we had some news. So as you can see, the market spiked up dramatically. So we kind of need to look at what these news events are. And I don't think we've got back that far, have we? Let me have a quick look. Pound. Oh my God. Can you just adjust that? Right, let me restart this. I'm going to have to go back to a time that is actually close so we can actually see what the hell's going on. Let's do 2024. We'll start in January 2024. Yeah. Because we need to find the news events, basically, don't we? So the idea behind this exercise is to try and build a strategy around news events. Yeah, to know what to do after a news event occurs so that we can basically use a scalping strategy to get in after the news is released, knowing what is most likely to happen. So we're looking to try and build an edge around the after news market movement, right? So that's the whole point of this, if you're wondering what the point is, because I don't think I said what it was. So there we go. This is 7 o'clock. There's no news there. Okay, we've got a bit of movement there. So the 3rd of January 2024, we had a little bit of movement there, but wasn't particularly big. So if you get a small move like this on a news event, it probably means the news came out as forecast. And there's not really a lot you can do with that because that could just turn into normal price action. It's just when they decide to start a move off. So we're looking for the ones which are big moves, basically, so that we can see what happens after a big candlestick goes in. So there's another one there. Look, we had a big spike up, retraced the whole lot, but wasn't particularly large. No news there. None there. None there. None there. That's the wrong color. Can't see the candlestick, but it isn't any news. Right, we got one there. So this one, we had a big spike up, not massive. It's 20 pips. I can't see what the ADR is at the time, but it's about 20 odd pips, which isn't particularly massive, but that is a Canadian release. And as you can see, all we did after that Canadian release was we pushed up, we failed, and then we completely undid the move. So there you go. So there's an A-shaped recovery. So let's have a quick look at what that was on the 11th of January. So January. Oh, I can move in years. Idiot. Didn't realize. So 11th of January. That was US dollar CPI. Okay, so that move there came out at 130. That was actually US dollar, not Canadian. So the Canadian obviously moves with the US dollar, and we're trading the pound CAD here. So you can see that that spike that we got there was actually not caused by anything in Canadian related. It was caused by the US dollar, and it undid it. So let's look at what the actual news event was. Exactly as forecast. So we did not get a shock in the market. We got exactly what we were expecting. So it moved, and then it A-shaped recovery retraced, because we were expecting it to come out at a 0.3. We got an ever such a slight uptick there. Year on year is not as anywhere near as important. Unemployment claims came out as forecast as well. So there's no news there. There's no news there. There's no news there, and we got a terribly slight uptick, which, as we know, a 0.1 differential makes no difference. So what we did was we moved up and we moved down. If you look at a US pair at the same time, you'll probably find exactly the same price action. So what we're looking for when you get these spikes is either you'll want to be trading, depending on the size of the spike, you either want to be trading the 5-minute time frame and looking for signs of weakness or pause in the market. So some kind of doji, a shooting star if it's a bull move, or a hammer if it's a bear move, yeah, or maybe a bearish engulfing on a low time frame to potentially signal that that move that we've just had was just an order dump and actually nothing to do with the news whatsoever. So we're going to come all the way back to here, and your target is always going to be 100% retracement, because it's going to be an A-shaped recovery. They're going to bring that entire price action all the way back to where it started, because there was absolutely no reason for it to be placed in the first place. So there's a load of what's called unfinished business in this candlestick that they come back and they finish off, because a load of traders get left behind in here with orphaned orders, and they drive the price back to where it was. So that's basically what's happening as mechanics. So there's one there, not particularly big. I'm looking to try and find a nice big move on one of these news events, so we can see. So we had a little one there on the 15th of January for the pound. So let's whiz forward to the 15th. Oh, no, there wasn't a news event. In fact, it was a bank holiday in the US. So no, there wasn't one then. We just had a movement for some reason. No, what wasn't a particularly interesting point. So nothing there. Okay, it's harder than you think to find a movement on news, isn't it? There we go. There's one. Right. So this is going to be, I would guess, either CPI or interest rates for the pound. Sorry, CPI more likely, 17th January. So this is a spike and continuation. So what do we think this is going to be? CPI, higher than expected. Yeah. So let's move forward to the 16th of January. It's the claimant count. Okay. So in this case, it's the claimant count is better than expected. So we've got an 18.1 and we've got an 11.7. So less people claiming means that the government has to pay out less money, which means it's got more money to put towards its debts, which means it helps the economy. So that's bullish for the pound. So green news, lower than forecast. Now, I wouldn't say that is a particularly lower than forecast. We quite often get deviations of thousands on this. This is a 7,000 deviation. So I mean, we got an 18 there. We'd have to go and look at what that was, but that was probably a big spike. But you can see these large deviations here are actually quite normal. So in that case, you probably would have been caught out trying to mean revert that move incorrectly. So for me here, having seen that big spike happening, thinking, well, there's no real reason for that spike, I would probably have entered short there, expecting an A-shaped recovery. We didn't get it. Yeah. Now, there may have been other things going on around that time that made this move happen, but that would have been the expected move. So you'd have been basically looking for the short there. Now, the important thing with these is obviously when you're getting in, you're using risk reward. So you always got to have a positive R if you're going to trade after news. So we'd be looking for a break. Now, you could also look at potentially bracketing this. So using something like ORB to bracket the whatever after, if you get an accumulation, in which case then you could have taken a break long and got on that. But the vast majority of the time, if it's a news event that is actually correct and we should be rallying, in which it did in this case, you're going to take a breakout long. So you're going to have your stop under there and you're going to break out there. So this, obviously, it's always the same with every trade you take. The market is binary. Once that news event has happened, it's either going to rally or it's going to V-shaped recovery, or A-shaped recovery in this case. There's only two things that can happen. So accumulation breaks, obviously in that case would have been what you want to do. I would have shorted that because I would have thought, well, that's not really news. But in this case, it didn't work. So there you go. So there's a great example. It's not going to work every time, obviously. Let's just see if we can get another news event. Oh, not very newsy, is it? Okay, so we've got a big one there on the 19th of January. Move forward. That was retail sales. Wow, massive, massive miss. Okay, so we were 1.4 positive. This is because of Christmas. But still, it's still a negative figure. We're expecting it to drop. It didn't drop by 1.9 as we were expecting. It dropped by a shed load. So 3.2 negative. That's a massive miss on retail. Hugely bearish for the pound. So let's see what happens to that one. Yeah. So in this case, as it is a massive bearish move, you're either looking for some kind of pullback and short, or maybe an accumulation break continuation. Yeah. But these types of trades, obviously, you have no idea how the market's going to react with the price. So you could just short immediately with a stop above the high, or you could look for an accumulation, or you could look for a pullback. Sometimes it will do that and drop, and you have a propulsion gap left. Sometimes the propulsion gap will be created by the news, and it just won't ever come back to test it. We need to look at ways of getting in. But in this case, it's an accumulation after the news and then a continuation break. So that's the reason that news, that move is happening, because this is really bad news for the pound. Retail's down, which means that businesses are making less money, which means a contraction of GDP, etc., etc. So it's all bad news. So there you go. That one continued down. Yeah, no V-shaped recovery in sight. We're not coming back to this news event. So this is a propulsion gap created by news. It's a fundamental shift. We weren't expecting it to be so bad. We need to get out of more pound positions because the pound isn't going to do very well off the back of that news. Now, it may well come back and test that propulsion gap at a later stage. May not. No news there. So there we go. There's the gap fill. Look. Propulsion gap fill. So obviously these act as magnets. We know that because that's why we have the indicator. But that was your short entry on the day. How you got into it, that's the next stage, isn't it? So, but understanding why and what the expected move after is the first part of putting together a news trading strategy. A lot of people try and straddle trade news. Yeah. So what they will do is they will put a bracket around the news before the news comes out and hope that the news is dramatically big enough to drive a huge profit on a straddle trade. So you basically put pending long, same as the ORB, pending short. The problem with this is you often around news get some kind of whipsaw or wide spreading by your broker, which means you get triggered on both orders and they're both turn into losses. Yeah, because they stop out. So it's not a good idea to do that. The best plays for news are to wait for the news to happen. So give it 5 minutes and then look at price action afterwards and what you expect it to do. Yeah. So there's one example there. Let's see if we can find another one. Not having much CAD news, are we? Probably a bad pair to pick, this Canadian. We're probably not going to get an awful lot more on this now. Right, so let's whiz over and have a look at, because nothing on the CAD is there at all. Terrible. Let's have a look at US pair. So we'll go over and look at the pound US, because that gives us more. I'm going to move forward into, where are we now? I'm going to move forward to March. Okay, now we're going to get a lot more lines on the chart because the US news happens at lots of times. So what we got here is the 115. So that thick line there would be non-farm payroll. So we're going to look for non-farm payroll, which is the first week of the month, of the new month. This is the normal news. I should have these turned on and off really. At 3:30, or rather the 1:30 news. Then we have the 3 p.m. news. So US news comes out at 1:30 and 3 o'clock. And then we have once a month at 7 p.m., which is there, FOMC. So this is only going to trigger once a month. This is only going to trigger once a month. So this would be the first week of the month, and that would be mid-month, usually FOMC. So we'll whiz through. So the big thick lines you can probably ignore really most of the time, but we'll see a spike on those suddenly happen, and that will be non-farm payroll and FOMC. So looking for news, not a lot, nothing so far. There's one. Okay, so we had a news event on the 5th of March. So let's go through to March 5th. That was PMIs. Yeah, so PMIs came out at 3 p.m. Forecast was 53. We got a 52.6. So it was a 0.4 differential. So what they were expecting was to drop 0.4. What they actually got was 0.8. Yeah, so it's a 0.8 differential on the previous. So as you can see, you've got lots of differentials here, which quite often will be 1 to 2% different from forecast. So that is actually not a particularly big miss. Yeah, so the reaction to the US dollar on that was a massive spike up. So it's negative news and the market spiked up, yeah, on the pound US dollar, which is correct because the US dollar dropped, therefore the pound rallies against it. But it's only a 0.4 differential, not absolutely huge. So we need to look for mean reversion. So we're looking for an A-shaped recovery on it. There we go. So there we go. We got the A-shaped recovery just after 7 p.m. So it took basically the day to do the recovery. So here you need to look at how would you have got into a trade. So that's the initial spike. Then we had a bear candle. So you could have taken a short on that bear candle. Obviously, if you'd have put a stop at the high, you would have got stopped out on that one. But it's just trying to find a way to get in. This one would have been a really tricky day. So push up, pull back, push up, pull back, and then we had an accumulation, then we broke. So that there would be a potentially good short opportunity. So your risk reward on it would be, so there's your lows basically. Yeah, so we pulled back, pushed up, pulled back, pushed up, pulled back, pushed up, pulled back, pushed up, broke that level. So it's a breakout of that low, short, stop above the high, retracement, down we go. And there's your target hit. Yeah, so again, a little bit more of an advanced entry, but it's not going to be an exact science. It's not just going to go like that and go like that. That's not trading. It doesn't happen like that, does it? We don't just get it to just go straight to target when we want it to. That would be far too easy. It'd be lovely, but it would be far too easy. So there's opportunities there for that sort of play. So you're looking for a low to form, which holds, and then you take a breakout of the low. So the entry's there and the short's there. But what's important is the bias it's giving you. So we had a massive move down on the US dollar on something which wasn't particularly bad news, because we've had way worse than that. Yes, it missed, but it wasn't particularly bad. So what the dollar needs to do is go back to where it started at. And obviously when you're looking at pound US dollar, it's the inverse. Yeah. So there's your A-shaped recovery. Most of the time they happen within a day, sometimes a couple of days. But usually what you're expecting is it's the wrong move today, so therefore it should be corrected today. Yeah, so it's an intraday move. Let's forward fast to another one. I won't do too many more of these. You get the idea. But you can go and plot these with lines on your own chart. In fact, what I'll do is I'll stick the EA in the group and you can play around with it. So there's one there. That was on the 8th of March. So that is a US announcement at 1:30. So that's probably unemployment. Yeah, unemployment. Non-farm at 1:30 as well. So that's the unemployment rate. Wow, that's a crappy move, isn't it, for the unemployment? Really? Wow. That's a really small move for the unemployment claim. That's actually reverted. So this is a really good example of one that I would have expected to actually do the opposite. I would have expected that to like go like the clappers, flag, and off you go. That's a 3.9. We're expecting a 3.7. That's massively negative. However, and this is again the trick with US news, it's combated by non-farm employment change being a massive positive. So you've got a massive negative and a massive positive next to each other. So they kind of cancel each other out. That's probably why that one hasn't had a massive reaction. If that had come out in red as well, you wouldn't have seen this touch the sides. It would just be off. Yeah, but you've got a positive and a negative, so they're basically counteracting each other. So very difficult to decide on what to do with that. That could have either flown or mean reverted, in which case this one was a mean reversion. But as you can see, most of the time with news, it's not news. It's expected or almost expected, and that's why you get the A-shaped, V-shaped recovery. So whenever you see a spike, and this is why ADR reversals work so well, whenever you get a big spike, it's not normally any reason to be there. It's just an overreaction or a large order that suddenly appeared in the market, which will get mean reverted. Now with ADR reversals, there is a possibility that's a start of a move, so you're looking for just a pullback continuation, which is why ADR reversals, if you're scalping those, you usually use a quarter to a third of an ADR as a target, because it will probably continue a lot of the time. So there's a good example there of another one. I'll do one more. I'm just looking for a big move at the news. That one literally just came straight back, look. And then off we went. Don't forget as well, the other thing with the US, which is why the US is a bit tricky, you've also got the New York Open at 2:30 p.m. or 9:30 a.m. US. So all around this news time, you've also got the added complication of the stock markets opening, which drives obviously the US dollar. So just a hell of a lot of volatility around that period of time. Just trying to find a really big move, which is a really good example. But as you can see, there aren't actually that many. There's too many lines on the chart. It'd be nice to just plot the actual news events. I have looked for an indicator that plots historical news. There isn't one. If you do know of one or find one, let me know. But I can only find ones that plot current news for this week and forward news. Nothing that goes back in history, any amount of time to do any kind of analysis like this. So something that's on my list to build, but it's incredibly complex. So there we go. So that is a nice move there on the 18th of March. So that is potentially a continuation. So that is what we on pound US dollar. So that is a better than expected move on the 18th of March for the US. Industrial production up by 1.7. So that's China. 18th? Was that the right date? Or maybe I got the wrong date. Nope, 18th of March, 3:30. The market just took off for no reason there. Look. So that isn't actually a news event. It's interesting that that happened to move exactly the time they released news. So that one didn't. That's just a non-event. Right, so that's FOMC. So there we go. There's your FOMC on the 20th of March. FOMC is a tricky one. So interest rates as expected, but with FOMC, it's not about the FOMC. It's about the press conference. Yeah. So I suspect in here, there was a load of talk about not dropping interest rates, or maybe there was talk about dropping interest rates. I don't know, but there was something happened in there. And obviously what we got was a big spike. FOMC is a little bit more tricky. So what it did in this case was completely retrace that move. So that is a large spike on interest rates remaining as they are. No, it's no reason for it to do that. This is the press conference. 30 minutes later, the FOMC press conference starts. Powell starts telling us what they're going to do with the interest rates after. So again, this is a Powell move. But that's the news. That's the A-shaped recovery. Yeah. So it's tricky to get into them, which is why I've never really focused on news trading, because there is a variant, quite a wide variance on what happens around news. But the important thing to take away is that the vast majority of them will do that. You will find A-shaped recoveries and V-shaped recoveries. So if you were to just set up a strategy or an account that is only going to trade news, and you just literally got in with a set risk reward ratio, which is above 2R, for example. So when you get a news spike, you have to have an entry that's going to be too big. Look, you couldn't take that because it's a 1-to-1 top of that candle. So that would be one you just go, can't really find a way into this. You could take a short and then put a very tight stop on it and hope that it gives you that type of ratio to get out. But what we're really looking for is some kind of pause that allows you to get a really nice risk reward ratio on these big news reversals. Yeah. And as you've seen, they do usually take quite a while. They don't just go straight up, straight back. They usually go up and they come down like that, which is why they called it a fade, because it's not a spike up straight back down to where we came from. It slowly fades back down. Yeah. So there you go. So that's really all this does. This EA is literally just drawing lines on your chart, and all it does is depending on the currency, if you're on an Australian currency, it draws the Australian ones. If it's a CAD currency, it draws the CAD ones. So if you trade Aussie CAD, it will draw Aussie and CAD. It won't draw anything for the US. Yeah. So it detects the currency pair it's running on and puts the relevant lines on. And I can't turn these on and off individually at the moment. You could actually turn them off and on if you just do a naught. I think that will probably work. That will get rid of the US news because it will just put it at midnight. So you could turn it off so you can just look at an individual currency. There you go. So all your news on the US is now midnight. So that's just going to plot the London. So you can, in effect, turn it off by just setting it to 0. So there you go. So that's it. Any questions on that? So next stage on this, if you want to pursue it more, is to look at ways to get into the market. Now, I've tried to build EAs for news trading. So ask away if you've got any questions. I've tried to build EAs for news trading in the past. And the problem with it is the price action after is something you really need to read. There isn't a thing that happens after news that you can say this happens every time a news event happens, that you can quantify into an algorithm to say do this when that happens. Because as you've seen, we've seen multiple news releases there. The price action around them is all very, very different. But at the end of the day, there is one of two things going to happen. And it's about creating opportunity. When you have a large move, you have a large retracement, which you know is either going to or not going to happen. So it's not about knowing that that's going to happen. It's about knowing that this is going to happen on the news, which creates an opportunity for a large risk reward ratio trade to be created. Yeah. So same as the opening range breakout. We're not knowing what's going to happen at the open. What we're knowing is that there is something going to happen. So it's an opportunity. So it's all about finding opportunities and then building edges around the opportunities. So the opening range, 9:30 a.m. every single day, the stock market bell rings, the market explodes. The DAX explodes at 8 o'clock. Yeah, that's when everything happens. So we have an opportunity. Every time there's a news spike, you have an opportunity, because it isn't going to just do that. It's going to either be, holy crap, that happened for a reason, or why did that happen? That was pointless. That is an opportunity for you to extract money from the market. So every day you look at your calendar and you go, what are the opportunities for today? We had an opportunity for the Australian this morning, which came out the unemployment rate as expected. So if you get a spike on the Australian dollar this morning, yeah, we know that there shouldn't be one because it's not news. So what could you do with the news? Mean revert it. Yeah, it's not news, is it? Oh, that's a good move on the Aussie CAD. Hopefully the Aussie US has done exactly the same thing. Ocean. So hopefully we blow that. I want to blow that high today. I want an ADR off this. Would be nice. But yeah, so just use the news as an opportunity to get in. There is a somebody sent me a while ago a strategy, which is one of Tom Hurgard's strategies, which is, I need to look at what it is. I think it's called the Rule of Four. I can't remember who sent it to me. I've got so many DMs. But yeah, it was the rule of, I think it was called the Rule of Four, and I can't remember exactly how you executed it. But it was based around trading inflation figures. So it's exactly what we've just been discussing. And you wait for the spike to happen. And I think you wait for 4 candles. I don't know whether you include that or whether you wait for 4 candles to paint afterwards. I don't know the exact, but if you want to go and look it up, you can look on Tom's channel. But it's along the same lines as what we've been discussing today. So we wait for the spike, and then you wait for the reaction after the spike to find an opportunity to do one of 2 things. So in this case here, I don't know, I actually don't know the rules. So I'm making this up as I go along, but I'm assuming you wait 4 candles afterwards, and I'm assuming you wait on the 5-minute. You need to go check it out. But so if you've got 1, 2, 3, 4 candles there, that doesn't make sense. That would be an awful entry. So you would have gone long and stopped out, but you then would have flipped short with, I assume, a stop at the high of that 4th candle, which is there. Just seems a bit of a wide range to me, but so you would have gone short there with a stop up there. You'd have been flip-flopping around in it for ages, but as we can see, the propulsion gap is grey, so it has actually filled the propulsion gap. Just took 2 days to do it. And probably stopped you out. So obviously I don't know what the strategy is, but was it you bracketed that candle? That seems to ring a bell. That you bracketed the 4th candle? I don't know. Anyway, but go and have a look at it. So, you know, it's all about opportunity grabbing, basically. So as I say, we know the opportunity is going to come. So you formulate a plan after the opportunity is arising, which is needing a spike. If it does nothing, if at the news event you get that, there is no opportunity. So scrap it. It's done. That news event did not create an opportunity. So you wait for the next. Yeah. So there you go. That's it. That's all I've got to cover on that part. That's all I wanted to do today on that one. But I'm not going to develop an EA for this because I have tried in the past and I haven't managed to find anything mechanical that you can apply to this. But you know one of 2 things is going to happen pretty much 100% of the time. It's about identifying price action. So it's a case of you need to kind of be around on a news event and for 30 minutes after that news event to read what price is doing. If you could use something like the reversal alert indicator on the 1-minute chart, that would be a potential way to trade the news. So the news was back here, wasn't it? There you go. So a 1 minute reversal alert would have been there. Yeah, so that down candle, that high, that break. So this would have been your entry here on a 1 minute market reversal alert. Stop. M pattern. Fade. Now your target should be there. In this case, it didn't get to target, but you got enough. Yeah. So, use your brain, trailing stop, break even stop, something. If you had have break even stopped it or trail stopped it, you obviously wouldn't have got the whole move because it got there the day after. But there you go. So there's an opportunity. So drop down 1 minute, wait for a reversal alert, take the reversal alert. If that one doesn't work out and the M pattern goes long like that, take the next reversal alert. Yeah. And if it's a news event that hasn't really meant that there's a fundamental shift, keep taking reversal alerts until you get one. The risk reward on it is going to be absolutely vast. Yeah. So, so have a go at that. Go and do some due diligence yourself. If you want the EA, let me know in Discord. I can stick it in there. But all it does is draw lines on your chart. So, as we've seen this morning, it's not the best DA in the world. It's something I've knocked up just to plot the lines. But a lot of these, there's absolutely nothing going to happen on them because it's plotting the times. And obviously for FOMC, we only have it once a month. Yeah, so that line's going to appear and do nothing for 30 days, basically. So, yeah. All right, that's it for today. Anybody got any questions? Anybody still here? Anybody alive? Today, we obviously just need to be aware that we've got retail sales and unemployment claims at 1:30. So there you go. So this afternoon is your first opportunity to test it. What I might do is we'll watch this afternoon and I'll post some. We'll look at it in the members group. So we'll look at that 1:30 this afternoon, retail sales and unemployment claims, and we'll see if we can find a way to benefit from it. Yeah, with a small risk, get in and see if we can either mean revert it, or if the unemployment claims are hugely green or hugely red, or retail sales is like negative 0.5, yeah, then obviously US dollar could well just go like that and then keep collapsing for the rest of the day, couldn't it? But we need to see. So the important thing with this is, I think, give it 5 minutes. Do not touch anything until that 5 minute candle closes. And if that 5 minute candle does that and then ends up like that, nothing to do. If that 5 minute candle ends as a massive bull and the news is bear, you want to be doing that, don't you? So we're looking for something to tell us to do the opposite. Yeah. And equally, if it's a massive bull and we get a massive bull candle, we're looking for something to accumulate, flag, or some kind of pullback to form, and then a market reversal alert to tell us get in long. Because if it is massive bull and massive bull news, we're probably going to get a massive bull move. So if it pulls back into that range, assume that we're going to put a propulsion gap in and try to buy it at some kind of pullback. But don't just buy it because you get a bull candle. Yeah, buy it when the market's price action is telling you to buy it. Now buy it. Don't buy it because it's come down. Buy it when it breaks some kind of structure, or you get some kind of candlestick that you could go, that could be a biggie. Yeah. Again, futures is really good for this. If you want to trade futures, we did some futures trading yesterday afternoon. Obviously, the market doesn't open until 2:30, but in the futures, we have the Globex session. So with Globex, obviously, the NASDAQ is moving 24/7. Yeah. So we're constantly moving. Yesterday, just so you know, if you were in yesterday's session, I ended up 280 down. So it wasn't great. But the market is moving. The market is open during Globex. So although the market opens at 2:30 p.m. UK time, if that 1:30 news event creates a spike like that and it's not news, I can trade it on futures as well, because the indexes are going to do the opposite to the US dollar. So if it's a bull move on the US dollar, you're going to get a bear move on the NASDAQ. If the bull move is expected to A-shaped recovery on the US dollar, expect the NASDAQ to V-shaped recovery. Yeah, you could also trade the Dow and the S&P, but the NASDAQ is the most volatile. So you can also do this on futures if you're trading prop. Oh, look at that for a support bounce. I wish I hadn't have opened this platform. My God. So if you were around yesterday, I drew these blue lines on. Look at the reaction. Yeah. Support resistance. It is a thing. And look at what we got here. A break and retest. So this is a long. So we've just basically broken that level. Now we're retesting it. Broken that level. Now we're retesting it. Now the market's a bit weak in Globex. So, I mean, it's 10 contracts. Big trade. I'm willing to risk $500 on that to make $1,500. If it bounces, it bounces. And look at that. It's a 3-bar reversal just gone in. Pull, pause, push. Break that high. Watch that level in case it is a continuation bear move. But if it breaks that level, we're going to test that area. Price action, just simple market structure. That's all it does. Yeah, that'll be me done for the day. But you know, this is the thing. That is there because I was expecting a price reaction. The fact that it did exactly what I said it was going to do yesterday to the pip gives me confidence that that is a potentially high probability trade. Yeah, super tight stop, super low risk, 3R reward. In fact, if that is going to hold, there's a high probability we're going to put in a new high in the Globex. So there's an argument for looking for a higher target on that. So you've got top of accumulation there. And then you've got nothing but clear air. So target just below that or target just below that. But that would mean a hell of a Globex session. I mean, if you look at what normally happens in Globex, yeah, you do get the odd one where it really moves before the open, but most Globex sessions, that's quite a big one. Most Globex sessions are crap. Look, this is why nobody trades Globex, because it's dull and very choppy. So, yeah, it'll either work or it won't, but that's the whole thing. You know, I'm not going to get greedy in this session. I shouldn't be trading it. I just opened the chart and saw that. Just one of those lucky moments where you open the chart and go, oh, that's exactly where I was expecting a bounce. But anyway, it will or it won't. Right, that's it. I will be back tomorrow. This is tomorrow morning. We're going to do the recap of the week and just go through everything. Let's just see if anything is moving before I disappear. Nope. So all just sitting around still. Aussie US is my focus. Really hoping that we get this bounce play today. Yeah, so accumulation break, retest, go up to here. But yeah, just sitting around waiting at the minute. I suspect we'll probably be sitting around this morning just waiting for retail and unemployment this afternoon. But that's it. After today, we got 7 o'clock news and then it's wait for Trump. So Monday, it all kicks off. But he doesn't get inaugurated until 3 o'clock or something, or after. It's late, it's afternoon, isn't it? So Tuesdays when he's probably actually Monday, he'll start going writing stuff and putting laws in place. But Tuesday, They'll all start to kick off. All right, so have a good day. I will check the rest of these manuals because I'm assuming that they all work, but I've just realized that maybe some of them don't. So I'll check everything's still published on my blogs. Because there is... Oh, that is a draft. But market alerts... I'm sure I've got a reversal alerts manual. Yeah, so that's an old one. Yeah, so that one is already there. Version 4, yeah. Okay, so that's good. I can... Don't know if I can delete that, but I'll get rid of it if I need to. Right. We'll see if with Trump the ADR values will go up again. Yeah, so you will get more volatility with Trump, definitely. You're going to get more movement in the US dollar because but it's more spiky movement. It's not necessarily more strength, it's more spike. So that is volatility, that is ADR hit. So you're the more of that you get in a day. There's a news event. Look, that's exactly what we've just been talking about. Look, that's on the hourly chart. Look at that on a 5-minute. Where was it? There you go. There's your 5-minute. So yeah, yeah, you're going to get a lot more spiky movement. Zoom in. Just realised I've clicked the wrong button. Unable to operate a mouse this morning. So yeah, you're going to get a lot more of this. The more of that you get, the more those ADRs are going to expand. But that still means the same thing. If it goes above ADR, there is still an opportunity to revert it. This is why we use ADR, because it's dynamic. If the market conditions expand because Trump does something, we need to use the new expanded size of movement. When Trump shuts up and the market contracts back to normal, we need to be using the normal movement, which is why I use 10 days, because the variance in 10 days is just about right for measuring what happens on average over the last couple of weeks. If you get something that goes into a strong trend, your ADRs will expand over a couple of weeks and then maintain themselves until that trend is over. And when it goes back into a range, it tends to contract back down again. So it's not perfect ADR because it's an indicator. Like all indicators, it lags price. It's lagging 2 weeks. Yeah, most moving averages are the same. Your 20-day moving average is lagging price by 20 days. I don't care what happened 20 days ago. What's going to happen today? It's got nothing to do with what happened 20 days ago. Yeah, we know it's been going up for 20 days, but you can see that on your chart. This is why I don't use moving averages, because they just tell you what you can see. Yeah, you can look at any chart and go, their moving average was going down there. Don't need a squiggly line to tell me it's going down there, and I can tell you that the moving average started to poke up there. Why? Because price started going up. Yeah, I saw price reversing here. The moving average was still going down, but this is where it was reversing. Yeah, moving average told me it had reversed somewhere about here, but I identified it 2 days earlier. Yeah, they know moving average is really good for newbies to the industry to understand what a trend is, and they're easy for you to spot where a trend was. But this is a trend reversal. The moving average won't signal until somewhere around about here that this is reversed. I know it has. Yeah, same with ADR. Oh, look at the volatility, it's all expanded. Yeah, I'm not going to find that information out for about another 6 days, but I can see it on the chart. Yeah. So, you know, we've got big expanded volatility, big expanded volatility, big expanded volatility. Yeah. Here, quiet. But you can see it's quiet. Yeah. So all indicators lag, unfortunately. This is why most of them are useless, unfortunately. It's all about price. And as we can't predict the future, we position trade. Because if we had an indicator that could predict future price movement, we'd all use it. but then nothing would work because no one would go the opposite direction and get it wrong, would they? So therefore the market wouldn't exist. Around and round we go. Right, there you go. I'll leave it there. Anything you need, let me know. I'll be in Discord. Other than that, back tomorrow morning. I will see you then. And we'll watch the news this afternoon and we'll see what happens with the news. So I might have a crack on futures at a reversal trade today. Or whatever it needs. You know, might be positive news that stays. So I might have a go at a break continuation trade. Don't know. We'll see what the news does. But I'll put it in the members group. All right, have a good one. Anything you need, let me know. Otherwise, I will see you next time.